Hey, JJ here. Welcome back to the Art of Value. So today I wanted to focus on just some bit of macro news for a change. And as you can see on the screen there, we have JPMorgan CEO Jamie Dimon says powerful forces threaten US economy. So JPMorgan came out with their earnings. The bank's earnings are starting to come out. Just seems like the last quarter's finished earnings. Some haven't reported yet, even from the last quarter, or have delayed. But the bank's first quarter profit fell 42% as it socked away funds to prepare for high defaults in case of recession. The Wall Street Journal says if you're just on audio and can't see the screen. So that's the news. Wall Street Journal making headlines today. And I'm just going to play a bit of react to this video. Or a couple of videos. This one is from CNBC. So this is what they said on the report. So remember that Jamie Dimon, CEO, he's highly respected on Wall Street. So what he says about the macro situation kind of matters. They will say that in the video. And, being one of the big banks, they have pretty insight to what's going on in the economy. So that's kind of why it matters in this pretty seemingly precarious situation that the world's got itself into. Well, partly COVID, but let's see what they have to say.
Russia-associated counterparties. I know you gave some of the color from Dimon in the release.
Whoa, that's too fast. Let me just slow that down a bit to normal speed. Here we go.
Remain optimistic, at least in the short term, and I think that short term is going to be something that people really dig into on the call later today. With regard to consumer and business balance sheets as well as consumer spending. They believe at this point in time it remains at healthy levels, but they do see significant challenges. Jamie Dimon, CEO and chairman, on the geopolitical front and due to high inflation, supply chain issues, and the war in Ukraine. So still digging through.
So we have Jamie Dimon saying, let me just go back to that, saying that we remain optimistic on the economy, at least for the short term. Consumer business balance sheets as well as consumer spending remain at healthy levels, but see significant geopolitical and economic challenges ahead due to high inflation, supply chain issues, and the war in Ukraine.
High inflation, supply chain issues, and the war in Ukraine. So still digging through this release a bit more, but wanted to share those details, especially about what's going on with markets and securities and their commodity derivative exposure, guys.
Yeah, and I would say that focus on Jamie Dimon's comments probably pretty important too. Look, we always look to what Jamie has to say about the economy because he's got a very good sense of what's happening. More often than not over the years, he's been optimistic on things. So when you hear him talk about being optimistic in the short term, but looking and really acknowledging all of these bigger issues that are going to pose risks for the economy, that's significant. He is not somebody who gets his head turned easily by headlines in the newspapers, but he knows.
Yeah, so he's a significant figure that's sort of been quite optimistic, even last quarter optimistic about the economy, but now is kind of sees more significant risk.
Knows that these are some big issues. For him to highlight it, it actually matters. And this goes into this debate about what the Federal Reserve should be doing, how aggressively they should be raising rates to deal with the inflation picture, but how do you do that cautiously without sending the entire economy into a recession?
That's right. It's his comments.
And I'll just break there about rising rates. There's some of the news in my part of the world. In New Zealand, we just had this on the screen. I've got a news item from CNBC again. So Wall Street, even though I'm in a small country, small economy, small developed economy, Wall Street takes notice of what's happening over the world. And what we have this headline saying, New Zealand central bank hikes rates by a hefty 50 basis points as inflation worries grow. So 50 basis points, 0.5%. So that was a bit of a surprise here. It wasn't that they went so aggressively. The Reserve Bank of New Zealand raised interest rates by a hefty 50 basis points to 1.5%. So still low, but that's compared to rates have been around the world. That's a significant move. On Wednesday, its fourth hike in a row as it seeks to reduce second round effects from sharply rising inflation. So inflation's kind of going nuts everywhere. Central Bank said in a statement the 50 basis point move, which was its biggest rate increase in more than 20 years, was intended to take the cash rate to more neutral stance and reduce the risk of rising inflation expectations. The RBNZ has been one of the most aggressive central banks in rolling back stimulus as policymakers sought to get on top of the red-hot housing market and soaring inflation. So I think there's a housing bubble here. So really what they're saying is that they're going out early with 50 points to try and get ahead of it, and so that they're still going to raise more, but they'll hopefully go slower later on, so they're trying to get ahead of it. So it'll be interesting to see how other parts of the world react to that, whether they do the same thing, whether the US does the same thing. So as I said, Wall Street really takes, even though we're a small economy, we'll be taking notice of what's happening here as well. All right. So back to Jamie Dimon.
In his comments, to your point, he's known for being candid, telling it like he sees it. If he thinks the economy is doing well, he's going to tell you. If he thinks that there are issues on the horizon, he's going to tell you that too. Right. So I'm guessing that will be a big topic of conversation on the call. And it's also about what they're doing. You've got a net credit reserve build of $902 million during the quarter. That compares with the release the prior year, which is why you saw such a big decrease in net income. So it's a combination of what his words say, what the color is that he provides about the state of the economy, and then also what they're doing about it.
Okay. So that's that. And we've got a bit more after the earnings call of this other one. This is Yahoo Finance. Provides a little bit more.
You touched on this a bit in one of your earlier answers, but just looking at this earnings statement, CEO Jamie Dimon said he was still optimistic about.
I'm going to slow that down a little bit. Again, I tend to listen to things on 1.5 speed just to get through. I find it fairly comfortable to hear, but I know a lot of people don't. But feel free to to speed up this podcast if it's at your comfort level, of course.
The U.S. economy, at least in the short term, and yet the bank has built up its net credit reserves by more than $900 million to protect against downside risks. How should investors ultimately be weighing these mixed signals on the relative risks to the outlook?
That's a great question. It really does seem to sort of fly in the face of each other, right? You feel really good about things. You see a lot of tailwind at the back from the economy today, but yet we're talking about things that are making us nervous, wider credit spreads and things like that. Part of that is driven by the reserve methodology that the banks have had to adopt right at the beginning of 2020, the CECL reserve methodology, which requires them to take a much more forward-looking approach. And Jamie really tried to discount focusing so much on that. And I think that if you're a bank investor, you shouldn't worry so much about that. It is going to impact earnings, but to the extent that problems come in the future, they will be reserved for it. And I would spend more time sort of looking at the core business. What is happening in terms of borrowing activity from their core client base? What is happening? We talked earlier about investment banking activity and sort of driving that top line opposed to sort of reserving activity. I'm not saying discount it completely because we expected going into this that we thought earnings were going to decline year over year again because of the lack of reserve releases. But if we see a bunch of banks come out here.
Okay, so that's it. So I'm not a JPMorgan shareholder at all. I don't own any of the banks, any of the US banks or any other bank. I do in the fintech space. I have Square, so I'm going to turn to a tweet I saw. Final commentary on this is that actually let's go to look at the JPMorgan share price today. Dropped $3.18. In that report they gave before, they're showing on the screen it only dropped a little bit, but at the end of the day, 3.18% down. So it did affect what investors were seeing there. So let's go to, yes, Jim Cramer. Let's see what he's got to say. Not my favorite.
The buyback on the other.
Let's go back.
Jamie Dimon strikes a note of caution in his remarks, says, quote, "We remain optimistic on the economy, at least for the short term. Consumer and business balance sheets as well as consumer spending remain at healthy levels, but see significant geopolitical and economic challenges ahead due to high inflation, supply chain issues, and the war in Ukraine." Jim, you've been framing it as the credit reserves on one hand, the buyback on the other.
Yeah, I mean, look, there's no doubt about it. When he buys back $30 billion, he believes. And that's long term. He's not going to buy it short term. But when you look at it, you say, oh, my God, he was on the wrong end of the nickel trade. Holy cow, he's building reserves. $900 million. I thought that we weren't going to do that if the consumer's that strong and the 5% loans. So, David, I put it to you.
Put it to me? Well tell me.
You're
I'm right.
You're my partner.
Yes, I am. Always.
All right, Carl, I put it to you. No, come on. Everything was pretty good, especially, by the way, equities, which really shocked me. But he's talking his own stock down by talking about the.
So on the screen here, by the way, while they're talking, if you're on audio, they've got a headline saying inflation surging. Dimon suggests sounds alarm on economy.
How
broader the challenges in the broader economy overall.
Yeah. Gloom and doom.
But he does that. I mean, listen, one of the things we appreciate about Jamie Dimon is you do seem to get it fairly straight from him. And so there is that. The stock has never recovered from the last quarterly earnings, where there was a lot of concern about expense. That is not going to be the case here, I don't believe, Jim, in terms of additional expense or expense coming in way above where the estimates have been. Obviously, a lot of that had already been reflected in perhaps estimates. And again, the stock price never fully recovering. They did add.
Okay, they're just going to talk about that for a while. So, again, Jamie, the bottom line is Jamie Dimon sees significant risks after being pretty, not bullish, but pretty confident about there not being a recession. So it sort of increases inflation fears, I think, but the market had an up day today. So that's that. One more quick item that I will go into. I wasn't sure if I was going to, but just a minute. Okay, here we go. So this, I'm going to highlight this because it shows there's still a fair amount of speculation fuel in the market. I mean, but in particular areas, not, things have become more subdued, and indexes have gone down this year. But this one here, what happened today was about speculation involving Tesla and this small company called LTUM Corp. It's fake news, really.
Talk to us about Tesla, about Musk, about what actually happened here.
Even by Musk and Tesla standards, this was odd, right? And I was sitting at my desk and I saw some tweets from some of the community that follow Elon Musk and Twitter, some of the Tesla owners and shareholders, and they were sharing screen grabs of a press release that said Tesla had acquired LTUM Corporation. You go on the Bloomberg terminal, look at the share chart, and just after 11:30 Eastern, the stocks jumped 280%. But I looked at the image of the press release, and I thought, none of this adds up. 5W Public Relations, you may know them, Caroline, well-known PR company. They don't represent Tesla, and they certainly don't represent LTUM Corporation. So we started hitting the phones, and of course it was a fake release, and there are still questions how it ended up on newswires. But what's astonishing is the release was published yesterday, on Tuesday, and the market's reacting, look at that chart, on Wednesday. It's been a wild day.
Official responses, actual technical official.
Okay, so that's enough of that. I think I know why it jumped. Let's see this. So this is this tweet by Sawyer Merritt, who is followed by a lot of Tesla people, Tesla shareholders on Twitter. He's one of the main kind of news sources, I think, for Tesla news, as well as Tesla Daily. And he pointed out on the screen here, if you're on audio, I'll say what it is. So it's 11:24 a.m. I tweet the above news, which was related to the press release. 11:25, 1 minute later, the stock goes up, but the news actually came out at 4:27 a.m. Lol. Do LTUM holders not check Newswire's feeds? The company does only have a $35 million market cap, though. So, and then it's an image of the LTUM Corp stock price spiking 278% or something to 80%. So he was kind of, I mean, did he check the wires? I mean, it was on the news wires. I think that maybe let's just see what Tesla Daily had to say, and the headline is fake Tesla news report pump and dump.
Moving on from that, I think a lot of the excitement around Tesla today had to do with some fake news relating to a microcap lithium mining company, Lithium Corporation. This all seemed to stem from a supposed press release published by News Channel Nebraska of Southeast Nebraska, which yesterday, shortly before market close, published a headline that said Tesla has acquired Lithium Corporation. It said that Tesla had confirmed this, which already should be a red flag. Then it also threw in some older quotes that Elon had said about lithium mining, which are not at all related to an acquisition, obviously, because they're older, and then threw in some context from Battery Day for good measure. Another red flag, News Channel Nebraska also lists this as sponsored advertising content, which would be, I think, somewhat strange to do for a press release, and they list the press release as being distributed by abnewswire.com. That press release is still viewable on AB Newswire. This headline yesterday was then also picked up by Benzinga and MarketWatch. That starts to give the impression that there's some sort of confirmation that this news is accurate. You start seeing it in multiple places. Still, though, not much reaction in the stock until this morning. Sawyer Merritt did tweet this out as news being confirmed by Tesla citing these sources, and a few minutes later, the stock ends up tripling. Bloomberg does a little bit of research. They confirm with the supposed agency that released this press release that it was not from them. This gets updated as fake news, and the stock falls right back down. All this taking place in the course of about an hour. So if you've never seen a pump and dump before, well, there you go. That's how they work. Fake news gets shared out, gets picked up by a couple of these algorithm-based bot services. People get confused, and then social media, where fact-checking is not even really second fiddle, ignites it, and it's off to the races. Lithium Corporation stock today had about 100 times its average volume traded.
So classic pump and dump. And so a lot of people were fooled by that, but it just shows you that there is still a decent amount of speculation in some areas of the market. The EV sector, which I think has been in a bubble, even though some of it's gone down. But as I said before, I think Rivian's one of the most obvious and biggest bubble stocks I've ever seen. The way it took off, it was worth over $100 billion. The company with over $100 billion hadn't sold a car yet, had a contract with Amazon, of course, but as Elon Musk says, prototypes are easy, production is hard, and so I think there's still a lot to play out there, and that kind of shows the speculation that's going on. All right, that's it for today. Thank you, and if you like this video, please help the YouTube algorithm, and subscribe if you liked it for more. And on Spotify, which is video now for this, use the notification bell on there and follow along, and it's on audio everywhere else. All right, thanks. And you'll notice on the bottom of the screen here, I've got the Twitter, the Out of Value Twitter. Follow along there if you want to make contact there, and it's a bit of extra news there, bit of extra news and talk. Okay, see you next time.